It's Thursday, September 25th. Let's level up. GDP numbers again came in better than expected. The Fed had just basically said that growth was slowing even after the Atlanta Fed had raised its growth forecasts. And now we have two back-to-back GDP numbers that were pretty good. Friday, we have PCE, so we still have to get through that. That's, of course, the Fed's inflation gauge of choice. We haven't really seen that much inflation in the data that's been more than just a spot, and then it's sort of reverted back to neutral. So I don't really think that there's going to be all that much fireworks in the PCE number. I could be wrong, but we will find out tomorrow at 8:30 a.m. As far as the VIX go, they did try to give it a ride today. They couldn't clear and hold the 17s. They need to get it over at least today's high, 1774, for a run up to the 200 MA at 1923. Listen, I'm one who's rooting for higher volatility because I like to sell out of the money premium and do ratio plays, and I can get wider strikes if I can get that. It doesn't necessarily mean we're going to get the higher volatility, but I would feel better for lower volatility back below 1623. Then we could probably check back to the 20 MA at 1575. But the 14s has been rock solid support, and I will assume it is until it proves not to be. As far as the ES and the NQ go, we saw some fairly sizable liquidation breaks below the 670175 neckline. We tagged out the 2 times range at 6646.75. We didn't quite get down to the 2.618 at 6612.75, and we are hovering around the Fed Day VWAP area at 66.59.25. So what now? To arrest the decline, I think the bulls at the very least need to get over 66.70.25 and hold, and then obviously back above the neckline at 6701.75. I maintain as long as we can't hold 6,700 plus, there is the risk down to the 6,600 area, that whole $100 table. As far as the Qs go, apples to apples neckline there is 24,780.5. We got the 2 times range at 24,533.75. We stalled just shy of the 2.618 at 24,381.25. So what now? Bulls there need to get over and stay over 24,647.25. And then obviously back up over the neckline of 24,780.5. Anything below there, I think, risks chop with liquidation break potential. And we are starting to see the money flow roll over. The good news is the breadth for these pullbacks has been very mild, 1-to-1. Today we were just testing into the 2-to-1 on the NYSE, and the NASDAQ wasn't even 2-to-1 thanks to Apple. As far as SPY goes, we did the whole MA to MA thing. We broke the 10 MA. I had said if we did that, we would see the 20 MA, and we did a perfect pirouette bounce right off of it. So what now? Bulls now will need to hold the 20 MA, which is currently 654.80 and rising. If you want to use low of day at 654.41, I'm good with that. The resistance now may be the 10 MA at 661.27. If there is still further pullback, the levels I would be targeting, 649.48, which would line up with the breakout that we saw from the 828 high. It would also be the green channel low. Maybe we get a move back down to retest the other breakout we have seen at 646.09. I do see a band of support still lower if you want to do some kind of 1-by-2 put ratio between 637.65 and 639.85. That 639.85, of course, is the 731 reference high, and that was before we saw that 2-day dump that led to this rally. But long story short, I think a pullback to the 649, 650 area wouldn't be that bad, and I think could be a right or right out by the dip opportunity. Stay on guard for a higher low tomorrow, and then if we were to take out today's high of day at 659.41, we could see a pump back up. Remember, these pullbacks have only lasted a few days. The bears will have to prove themselves. As far as the Qs go, they didn't even get the 20 MA. They closed just under the 10 MA, so anything over 594.42 I think could rally back up. I had told you I thought we would see some resistance between 600 and 610, and so far that has been the case. If we were to continue pulling back, I could see some support at 583s, which was our reference breakout from 813. 20 MA is just above there at 858.14. And if we were to do an apples to apples pullback to, let's say, the 731 high, which lines up perfectly with the channel low and the 50-day moving average, you're looking at 574s. So if you want to do some kind of 1-by-2 put ratio playing for that, I'm good with that as a hedge or just an outright short play as long as you can get it on for a net credit. We saw some massive pullbacks in stocks like CarMax today. I was very tempted to buy the dip, but I usually like to give it a few days to shake out. I'd feel better with this down below 37s. I may do some kind of 1-by-2 put ratio playing for that, but honestly, could it get the obscene number into the 29s? The 2007 top was 29.45. It would not surprise me on a week tape to see that happen. I may go out a little longer dated, maybe even to the January options and see if I could get something on. But if you want to start nibbling, I don't mind doing that into a few more days of weakness. If we do lose 42.75 low of day, I do think we're going right down to that 37.59 area. Freeport-McMoRan. Now, they got smashed because they had a mine that flooded, so obviously their earnings aren't going to be so good. I put on a 1/2 put ratio today, playing for still further pullback. This is one I actually want to get long a bit lower. I did in January 32.29. Now, the obscene number in this, we could see 27s and maybe even a move down to close to 20.88. But I would still be buying on a move like that. I don't think it's going to be a straight shot down. Now, the 78.6 of this range that we've seen from the low on 4.7 all the way up to the high on 7.8 would take us down to the 78.6 at 32.25, and it also lines up with a potential channel low. I will be covering the 1/2 put ratio if we get down there, and I'll leave the 29 override on. Would I put on another put ratio, playing for still lower prices, maybe for a move down to the 24s or 27s? Yeah, I don't mind doing that. I don't mind stacking up some wins with long puts to lessen my cost basis to maybe start building a position in this. Again, this would not be a quick day trade type of situation or even maybe a near dated swing trade. I'm looking for this as a little bit of a longer play, but again, I would welcome the quick wins. I always like those. Apple of my eye, doing very well here, riding channel high up here, the yellow channel that is. Reference high at 260.10. I'd be very surprised if we don't get that, maybe overshoot to channel high at 266.17. Told you these phones were going to be a big hit with the front-facing camera and that new Slim Air model, which is like the new fashion accessory in my opinion. Google continues its pullback. We're caught between the 20 MA and the 10 MA, so bulls will need to get over the 10 MA at 249.70, and bears will need to break it below 239.20 for a retest of 229.75, which was the after-hour spike high from 9.2. I don't mind doing a 1/2 put ratio, targeting the 50 MA on the downside. I wouldn't even mind doing 20 MA at 240, selling 215 for the 50 MA with an overwrite down at the 100 MA, probably closer to the 195 to 200 level by the time it would get there. If you want to go a little longer dated for something like that, I don't mind, but it seems like a little bit of a pullback. We hit some key fib extensions that we had talked about in the midweek video. Doesn't surprise me to see that pullback. I will also detail that CarMax and FCX into the weekend video, so don't worry, I'll show it to you on the charts. Bitcoin continues to pull back. I mentioned in the midweek video, it wouldn't surprise me if this is in a 10,000 point range, caught between 107s and 117s. It has a bit of a higher low in the overnight session. If you want to try long here, I don't mind doing it with 109,440 stop. On the upside, quick trade up to 111,451, the 100 MA. I do see some resistance between 112,345 and the 20 MA at 113,300. I do think this is trading in a range. It wouldn't surprise me to see some still further pullback here, but my thesis right now is going to be that range trade. And I actually took the opportunity today because I did have a little bit of that IBIT still on. I had been in a 70-80 call spread with some short 55 puts to finance it. So I rolled down the 80 calls to 75. I took a big profit in those 80 calls and brought in some more premium. 75 is above the highs, obviously, so if it gets up there, good. If we still continue to chop here, that premium will erode. This trade may have to get rolled out still further, but I have time because it's in January. As far as Ether goes, I have ETHA play on. I'm long the 30 puts, short the 25 puts. Probably will cover this if we get down to the 26s, which is the anchor VWAP area. I'm looking to start to build this on the 5, so I would get along a little bit at the 25s, and then 20 I'd be looking to load the boat because that's really where we broke out from. I don't necessarily know that it's going to get down to the 20, by the way, but I do think that that anchor VWAP was a big pass don't pass line, and it wouldn't surprise me to see some buy the dip opportunities there. Generally speaking, markets are still very close to highs. We've only had a few days of pullback here. Breath has been pretty mild. We've seen a couple of big blow-ups on news, but when you have stocks like Apple that continue to bull up to the highs, and intra-week you start seeing some other ones like Tesla, for example, looks like it's going to make a run back up to the highs. I think you could be long that if it gets back up over 429.84. Holding the 10 MA here could be a stop as well. I would be a dip buyer there if we pull back to the 20 MA at 383.26. The bears don't really have a case here for that earnings because we know there's that big pull forward. The guidance might be a bit of an issue, but I'm hearing they're going to have some new product releases that may pick up the slack. Generally, though, a lot of these stocks keep trading off which one rallies, which one doesn't. You had Oracle down after having been up big. They did some debt issuances. We'll talk about that in the weekend video. That capital structure change has me a little bit concerned, but not overly. We had a bit of a down week. I think if there's a down open tomorrow, there might be an opportunity for a bit of a bounce trade going into the weekend. Sometimes we see with down weeks, we get rallies on Fridays. Now, if Friday pins the lows and we have a very bad close, it wouldn't surprise me to see some follow through on Monday and then maybe a turnaround Monday, Tuesday opportunity. Like and follow for more.